Alright, so the goal of this video is going to be to show you one crucial mistake that most traders make. Now, that has to do with price action. Don't get me wrong here, price action really changed my trading completely. Now, it's something good. It's something that you should use if you want to trade successfully. But a lot of people are going to focus on patterns. They're going to look at, this is an engulfing or this is a pin bar, so I'm trading that. But price action is not how it works. It's not only candlestick. There's much more to it. So I want to show you in this example one patterns that I saw recently, and I want to show you why I took the opposite direction of the patterns. Now, this all has to do with context. You have to understand what is the context of the market. How is the market behaving? Because if you don't understand the whole context, what's happening before and after, and you just look at a small price action pattern, you're going to see that things are not working at all, right? So sometimes, for example, a big candle could simply be an exhaustion. So it could simply be the fact that a lot of buyers are stepping in the market, but now they're kind of exhausted. So then the sellers just come in after. So you have to understand that patterns or big candlestick don't mean anything, right? They can give you something if you look at it with confluence. If you have many evidence, that's a good sign. But if you just look at one pattern and you want to enter a trade right away, this is not the way to do it. So I want to show you the chart. I'm going to show you in details, and I'm going to try to show you also how to look at the context, basically how to understand how the context work. So we'll look at that, and I hope this is going to help you. Okay guys, so this is how it works. I'm on the USD CAD right now, and I want to show you what happened in the past a little bit, give you a bit of background, and show you the trade that I know people took, but I want to show you why I took the opposite trade. So this is the USD CAD. It's a 4-hour chart. Now, as you can see, a lot of people probably saw this as like a downtrend, right? So price going down. So what traders are thinking, most people are thinking at that point is, okay, so I'm entering on a retracement. As soon as I have a retracement, meaning price going up, I'm entering the market and I'm selling the market. So we had this retracement here, right? Move up. Then big engulfing candle. People are saying, oh my God, I'm selling here. So a lot of people are selling at that point, right? New traders are going to see this. They see price action, good, engulfing pattern. It said it's a good pattern, so I'm selling at that point. Awesome. So then those people sell at the close of this candle. Some people are going to sell at the close. Some people are going to sell below the low. That's totally fine. But the point is, people don't understand the context here. I want to show you why, even before that, I was basically in the opposite direction in a long trade. And the point is, we also had this candlestick pattern here, right? This is like the same thing. As you can see, you have this engulfing, this engulfing. Now this one happens kind of at the low. This one is like in the middle of two points. And the other thing, when I talk about context, this is what you have to realize. It's not only about looking at a chart like this. I always want you to scroll back, try to look at the whole picture. What is happening? You can even go on a daily chart if you need to. But what is happening on the big picture? So we have this downtrend, then we have this move up. Of course, that trade's not going to last for super long, right? If you enter a buy trade here, it's not going to last super long. But what you want to do, what you want to make sure, is that whenever you buy, let's say, so whenever you trade in a trend, you want to buy at the low, and you want to sell at the highest, right? When you have a retracement. So I'm just gonna try to give you a blank chart to show you how that works. Okay, so whenever you're in the trend, let's say price is moving that way, right? Okay, uptrend. So you want to buy at the lows. So you're either gonna buy here, either gonna buy here, either gonna buy here. Okay. Now if you have a downtrend, you want to buy at the high. You want to sell at the high. Okay, so you're gonna sell either here, here, or here. Now the point is, if price does something like this, going down, going a little bit up, down, you're probably not gonna sell here. Okay, this is not the right way to do it. You want to do it at the maximum point, either at the lowest low or at the highest highs, like this. So when people are looking at that chart and they see this, right? A lot of people are gonna think that this is a retracement, so they should sell here. But they don't see the big picture before. They don't see the fact that price has been moving like really fast up. We had this big candlestick, right? Pressure by the buyers. More pressure here. More pressure here. And even more pressure here by the buyers. So price is always increasing. People are not thinking about selling at the moment. Even though if you go to the larger picture, I know this is not the best case, because the larger picture, it's a downtrend. We had kind of this is kind of breaking the downtrend, but still it's a downtrend. The point you really have to realize here is that you always want to look at the trend on the chart you're trading, and then you look at price action patterns. But those need to fit the trend usually. You gotta see that you have much more chances of entering a good trade if you follow the trend. When everything is aligned, that's when you have the best trades. Now, the second thing I can tell you for that specific trade is that usually when you want to enter engulfing patterns, you usually want to enter below the low. So in that case, it would have been safe, right? Because the low on this pattern, right? The low of this pattern here is here. So if you're entering below the low, you're sure that price is not gonna, like, you're kind of adding more reliability to your trade. Now, of course, it can turn back up like it did here, even if the low was broken. But you're just adding like one more measure of security. So check out the article on DesireToTRADE.com about trading engulfing patterns. There's a full video on that. I think there's a full article. There's a full cheat sheet even how to trade them. That can help. And always make sure that you analyze a little bit the chart, right? It's not about looking at patterns necessarily like super on a small scale like that. It's really about looking at the whole big picture and trying to figure out what is happening, who's in control overall. Is it the buyers or the sellers? Here's really the buyers in control of the market. So you want to make sure that you align with that. Unless you want to do reversal trade, which is fine, but you won't get the same reliability, right? It may fail more often. And the other thing is, whenever you're gonna trade something, as I said, you want to trade it at the extreme. So if you're gonna buy on an engulfing, you want the engulfing to be really like at the lowest point. If you're gonna sell with an engulfing again, you want to have it at the top, like this. This is not the top. This is like in the middle. So always think about this. Check out DesireToTRADE.com, as I said. Go on the Facebook group, DesireToTRADE.com/group. Join this for free. It's great. We just reached 400 members, so I'm pretty excited about it. I look forward to see you there. And if I can do anything to help, just let me know. I'll see you soon. Ciao.